Hey guys, just want to do a quick video on AMC. Looking pretty spicy, to say the least. And I guess at the start of the day, it's Friday. We were all hoping it was just gonna like kind of cup and handle here and then just going up. But what I realized is I believe, this is not my unprofessional uh, take on this, is that what's actually going on here on AMC is this is a classic inverted head and shoulders with a bear trap at the end of it. And there's a couple of reasons that I believe that it was, in fact, today was actually the last day of the inverse head and shoulders and the last day of the bear trap. Or the end that this right shoulder over here formed the bear trap. And I want you to see something, because if you look at this move over here from late April, or late March, April, it is exactly the same thing. I mean, it is so similar. It's hard to even figure out how it's not similar. It's just, but what I do find interesting is how the scale, like this time, the scale and the price movement, we went from 16 up here to 20. Let's move this out of the way. We went from 16 all the way up to 27. The scale on this, the algo is running this time, is much larger. And it actually took a lot more days to complete this than it did this inverted head and shoulders on this time frame. And it's actually even larger than this one's similar. I believe this is actually, if you really dig into it, this is actually inverted head and shoulders, but it looks really choppy. But there's a couple of things why I'm not really worried about. I got out of my calls at the beginning of the day. I was like, they're gonna probably just flush it. I didn't really know what price, but I did pull up my fib channels, and it bounced right off of the 50%, which is right about there at that. And this might not be exactly perfect. Drawing these fib channels with all this bleed through can be difficult. But basically we have a 1, we have a retracement down to the 1, and then we have a retracement, we go all the way back up, and then we have the right shoulder which lands on the 50. And that's important. I have been faked out many times recently on SPY with these bear traps, and I would go into them. I'm like, oh man, it's gonna flush down, and I would buy puts and I get smoked. This is twice now. I'm like, I'm gonna learn my lesson. What is it about the bear trap that I'm not getting? And it's this low volume right shoulder, okay, and it lands on the 50. So yeah, there's a couple of things. Yeah, we had a very low volume day. If we look at the daily, I'm not even worried about the size of the candlestick or anything like that. It's the volume profile is much. So we have big heavy volume. We come back down, and the prior day's buying volume is greater. Like we had a lower than average volume day today on this on a big down day, which to me is important. Even if the candle was smaller, if the volume was much heavier on a red day, on a red candle, I'd be more worried. So we do have this nice harmonic volume. So, and that's why I don't really look at this so much from the day. I'm looking at this from the 4-hour time chart, and we had a perfect bounce off of that 50 and then a rise back up. And I think we closed down actually like 24.20. So maybe we will touch down again down here at the 50, and then it's time to get moving. If you look at this previous run, it actually, I believe it came right back. Let's see. Oh, the other thing is this whole run here, this is the 25th. Guess what day this is? The 28th. So this is a Friday. This is the latter part of the week, just like our run up right now. And then on Monday you come in after this bear trap in here, and then you rip up. So I want to go through just the mechanics of a bear trap, and one of them is that low selling volume on the right shoulder. And I think SPY is probably, I'll show you how I got faked out on SPY the last couple of times. And I'm going to learn my lesson. So I got faked out here bad. I lost a bunch of money on puts. Did not learn my lesson. And I got faked out here bad. Went into puts here on this, and I didn't I didn't learn my lesson. So I'll show you. I believe this is the one right here. Let's see. Where's that 50? It doesn't have to use the 50. I think that's more accurate. And these are not. I'm trying to use 4-hour candles to do this, and it's a little choppy. But again, this low selling volume, look how low the selling volume is. And I noticed that. I was like, oh, it's going to crash out. It looks terrible. And I had different trend lines at the point. And I got smashed. So these bear traps, one thing that's so consistent with them is this super low selling volume at the last little bit. It's not, if it had been like really heavy selling volume in here, and I want to show you the difference. Here's the difference where it tries to come up. Look at yeah, it was super low selling volume, but then the volume picks up. Let's go to the daily. The daily is definitely the better one to use. Again, 44 million on SPY on a down day is nothing volume, and it landed right on that support of that 618. So you nice little stair steps. I did not see that. Right at that 410 level, hit dead on that, super low volume. And this is the, when the CPI data came out, and I got smashed here with puts, and I got these fib channels were wrong. See if I can find them. finding the one is the critical piece. That's the hard part. Go back to the 4 hour. Got to get the one right. Here we go. Either way, I missed this nice stair-stepping action, and again, super low volume on that right shoulder. I just, I didn't understand the mechanics of these fake outs because I'm like, oh, I think it's gonna break the support line, and actually, it didn't. And that is just something that, the mechanics of these bear traps are. I just wiped everything out, but yeah, I just wanted to show you guys that it's, yeah, here it is. There's SPY, and that's what I think is forming on AMC. I'm not really, I know the candles look kind of ugly, but I do believe that it's the exact same algo from March, April. It's just the percentages are much, much bigger. And it's because of that I believe that our run up is going to be much, much bigger. And again, nice stair-stepping action right off of that 50. Came right back up, and I was watching the price action today, and it just nailed that. So unless something happens based on the dividend coming next week, and all the monkey business that they're gonna have to, I think they really got to get people to try. They're gonna do whatever they can to get people to sell, and just my opinion that they're gonna do whatever they can to get it over $100 where they can get some sellers, because a lot of people did not sell at $70. I didn't. And I'm not. People did whatever, but I know a lot of people did not. Vast majority of people just wrote it up and wrote it back down. And so I think this week they're going to actually, especially starting Monday, Tuesday, they're going to really heavy rip this thing up. Probably rip it all week. I think it's going to be a wild ride next week. But that's just kind of my non-professional, non-financial advisor guess on this, is that this is in fact that nice stair-stepping action, retracement of the 50, bear trap, classic bear trap that I've fallen for so many times, and now I'm learning to pick them up and see what they are. And I believe that's what this is. So just some basic price targets, of course, are not really the 34. I really just want to get over 30, and then right in here around $37, $38. There's some resistance. I think I'm gonna look for some kind of I'll just draw a line up here, and then some kind of a reset. Probably down to that 34, and then it just keeps going. And I'll show you that it did that exact same move over here. So we rip up to 29. That's kind of the move that we're in now. And then it goes all the way up to 37 again, all the way back down to 26. I mean, that is a huge, this is a crazy day. And then it, big reset, and then it rips back up. So we could have an even bigger, a complete retracement, right back. Um, see something like that, a big old, rip and dip, just like that from that 38 right back down to 26. And then the rip up. That would make sense because like if we look at the RSI, especially on like the daily time frame, we got some room to run, but I think if we run up here, we're going to be in the overbought area, and this heavy push down is going to build that spring. So I'm going to try to play my calls accordingly if I can, depending on how hard we reject off of 38. If we do, it doesn't mean we will. It just might do that. But I think it will build that heavy spring and probably stop at that 2740 or something right in there. That would make the most sense to me, is it stops right on here on this $27 2740 candle mark right here, which would be basically, it's a new trading range. You go to the top of the trading range and then you come all the way back to the 1. Okay, so you go all the way, you start at the 1, you go all the way to the top, which on a fib retracement ratio, we'll just do a real big one. Right here to that 38, and then you come right back to the 1, and then you disappear. That would make, something like that happen. That would make sense. I mean, maybe it'll come up here, and then you build another, then you go to the 50, and then you go back up. I mean, maybe it'll do like that, but it'll probably do that in a single day. Something like that. That would make some sense. Literally what we did here, we go up, retest the 1, and then go up to the top, and then come back to the 50, and then we're gone. In this trough, maybe it'll come to the 786 at 29. That would be cool too if it does something like that. Nice little stair step pattern. That would make a lot of sense to me, because once we get in this trading range, and the other thing I want to note is I don't think that they've hedged a lot over $30. And I think that's why when we got here at $30 last time, the option chain was very similar. They have strikes, but they don't have a lot of strikes over 30. They got some 40s now, but I really don't think they've hedged much for those. And then so you get this nasty gamma ramp from $30 to $40. I remember I had calls on this wick here where we got halted. That totally sucked. Really pissed me off. But yeah, we went from $30 to $34, and it was lightning fast. And I think that's what they're that's also what's going to happen here is we were going to explode up here to 38, and we're looking for some serious volatility though. We're getting this harmonic volume coming in here. We haven't had volume coming in here. Look at that. Look at that low volume right shoulder. Golly, I get suckered in by those and by puts, and I get smashed. So I'm not doing that anymore. Just trying to learn from my own mistakes. Either way, guys, I hope this video was helpful. Again, I'm not a financial advisor. This is just my unprofessional opinion on AMC. And let me know what you guys think. I'm excited for the dividend.